Hello, my name is Max, and welcome to the Digital Finance Podcast, where we talk about how biggest financial players in the world are adopting tokenization and digital assets. And today our guest is Shruti from Fidelity, and she's doing investment research. Welcome to our podcast, Shruti. How are you doing today?
Yes, I'm doing great. Thank you, Max, for inviting me to the podcast. So, yeah, as you mentioned, I'm Shruti. I'm currently living in India. I'm working with Fidelity International in their global investment research team. We all know that Fidelity recently launched its digital liquid fund on the chain, which is the first tokenized fund of Fidelity. And I'm really excited to talk about the trends related to tokenization. I'm myself a fintech frantic. I myself try to stay up to date for about everything about fintech, especially tokenization. And yes, so really excited to talk about this.
Perfect. And exactly as you mentioned, Fidelity is one of the largest asset managers with, I think, more than 1 trillion in assets globally across equities, fixed income, and other products. And I think during the last couple of years, you guys been active across two main verticals. From what I've collected, it's the tokenized money market fund shares on Onyx, previously Onyx, now Kinexys and JP Morgan's blockchain, and now the FILQ fund, the yield-bearing digital native USD liquidity fund. So this is very exciting. And my first question to you regarding the landscape, all these big four consulting companies, banks are making their predictions on the tokenized market to reach 5, 8, 10 plus trillion USD in value by 2030. What's your opinion on that dynamic? Is it realistic, or the industry is still kind of not ready?
So I would like to say that since big players are already adopting it, it's a signal for the entire market that tokenization is here to stay, and not just stay, it's here to turn big. So if we look at the recent reports like of McKinsey, it said that it will grow to $2 trillion by 2030, right? It was the baseline scenario. It was the least scenario that tokenization could achieve. So I believe that so if we look at the bulls, okay, the timelines can vary a bit. So if not in next 2 to 3 years, then certainly next 5 years, tokenization will be huge. And if we talk about skeptics, they are really underestimating the trend of tokenization. Everyone who missed on ETFs does know that they missed a great opportunity. And it's a starting point of tokenization as well. So if we are here, if we are into this market, then yes, it will grow certainly. I'm very positive about it. There are a lot of factors revolving around 5 VR. Everyone, big firms, not just Fidelity, BlackRock has its own BUIDL, which is tokenized funds. So that market is moving towards that. So it's here to stay, and it will certainly grow big. We all know, of course, I'll like to also share some facts. So around in the starting 2025, the tokenization of real world assets was around $5 billion. If we exclude the stable coins, of course, they've become huge. They've become like an entire infrastructure layer for AI agents, but that is except if we just exclude stable coins, then it has grown to $20 billion from $5 billion in less than 18 months. So we know it's growing at a very fast pace, and it's here to stay. So yes.
That's exciting. And obviously, I think across different asset classes, and stablecoin is, I would say, a distinct use case, which is taking up a lot of attention currently, right? But let's say if we're looking at the motivation, which interests me all the time, let's say such a large investment firm like Fidelity specifically, what is driving the interest from Fidelity specifically to adopt tokenization? Maybe it's some cost benefits, maybe it's some additional capabilities of financial assets that has never been available before. What's your take on that?
I think there are four major reasons that have made the tokenization and the token funds more attractive for Fidelity. Like I'll start with the most important ones. The first one is efficiency gains. Everyone who is talking about tokenization knows that it's very efficient than the traditional funds, because tokenization not just reduces the cost of, it not just enhances the cost efficiency, but we also know that, okay, if today, Max, you're going to buy a fund, you know that at the back end, a lot of people are working, right? A lot of custodians, a lot of transfer agents are there, a lot of paperwork. So that actually enhances the settlement time to 1 to 2 days. But with tokenization, it's actually reducing that time few minutes. So it's so efficient. So not just cost, but also time. That's one. And as asset managers, when the cost reduces, the fund charges reduce. So it's beneficial for everyone, for the clients, for the investment managers, everyone. So efficiency is, I believe, one of the most important factors that everyone is looking at. Secondly, I read a recent report wherein European Union was looking to adopt tokenization to enhance the retail participation in the capital markets. Because usually if we see the funds have a high ticket size, so it's really hard to enter into the market, especially for retail investors. So tokens, they actually reduce the ticket size and retail participation can enhance. So that is another factor. There is transparency and programmability. So the recent fund that Fidelity launched, it's available on Ethereum. It's available on Chainlink. You can check out the NAV of the fund any day on real time. So it's so transparent. You can see the flows, everything. So that's also what makes it more reliable. Second is programmability. So very like block-based tokens, a lot of processes related to the funds can be automated. For example, income distribution related to the fund can be automated using special contracts and smart contracts. And apart from that, we can also use those tokens as collateral. So it's very easy. Everything can be automated. Secondly, for new clients, we like a lot of stablecoin issuers are there, the corporate treasuries are there. They're looking for more investment avenues related to blockchain. So they need funds. So demand is coming. So we have to provide the supply as well. So that is there. So for new clients, that's there, I believe.
Yeah, I think from the majority of points that you mentioned, the, let's say, back office benefits are like on the issuer side, either to cutting cost or to making the settlement faster and reduce the time, also reduce the counterparty risk, right, while the transfer is taking place. That's a very major point for adoption, and I think more and more asset managers, financial institutions are now realizing that. So that's definitely a great news. And talking about the further adoption, if we look at some of the products that you guys have launched in the past with the FILQ fund, I think compared to the overall assets under management, the volumes are still limited. I think it's sitting roughly 35 million in value, this fund particularly, but also looking across other issuers, the picture remain similar, that the adoption is limited, even though the benefits are pretty obvious. To what's your take on maybe some blockers or risks that are kind of stopping the full adoption from, let's say, the current level of 35 million in value to maybe tens and hundreds and billions?
Yeah, sure. So first thing first, I would not like to see it as a major problem, because we just launched the recent fund just few weeks back. So it's just very early stage. So it will be expanding, it will be growing. We know that when BlackRock released BUIDs, it was very small. Now it's more than $2 billion. So if we see it on an economic graph, we are at the starting point and the graph will grow. It will grow at an increasing rate. So that's for sure. But yes, I strongly agree that there are certain blockers to it. Like I feel the foremost one, so technology is not a blocker, first thing, because technology is growing at a rapid pace, and it's growing at a perfect pace for adoption of tokenization. One is the regulatory bottleneck, the legal bottlenecks. So even Fidelity being international, we have our offices in different jurisdictions. They have different set of regulations around tokenization. For example, US is more focused on stable coins. We recently had European Union's MICA on the crypto assets. Whereas in other markets like in India, crypto is not that much supported, but still our central bank is moving towards tokenization. I'll give an example. So for example, a Reserve Bank is the central bank of India. It recently launched a UMI, which is a Unified Markets Interface. So it focuses on asset tokenization, promotes asset tokenization, and also promotes settlement on the basis of CBDC, which is central bank digital currency. So it's a step in the right direction. And so every government is moving, but the pace is slow and different. So I think in some markets where it is openly being invited. In some markets, it's growing slowly. So it will take some time, the regulatory bottleneck there. But yes, of course, you said the operational efficiency would increase with tokenization. But we know that traditionals had their own set of risks. Tokenization being digital has its own sets of risk, like cybersecurity risk. There are certain related to the smart contracts. So we have to make certain guardrails around those risks, how to reduce them. Because we are managing someone else's money. We cannot just move fast and then break everything in the process. We have to keep the operational efficiency and smoothness from end to end. Looking at that, it may take some time in the beginning, but as soon as we go deep in the market, we understand it well, ensure that the operations are in place, then I think that we'll go more in scale. We'll advance.
That's interesting that you mentioned basically different regions from US to India, and I've been actually in talks with a person from the Reserve Bank before. We're talking about the CBDCs. But what's your take on, let's say, these difference between different regions and what asset classes are getting tokenized there? Like the example of, let's say, in US, stable coins are kind of the core. What's driving the adoption there, but maybe looking at Asia and sometimes looking at India, I think the picture is different because the 99% of stable coins are USD, right?
Yes.
And talking about the currency protection here, the take I got from this person was that tokenized deposits is something that they're betting on, and digital currencies, of course, the governmental currencies. So what's your take regarding the asset classes beyond stablecoins? What will be the most adopted asset class in the next future?
Yeah, I think you mentioned earlier about the growth rate to $5 to $10 trillion. I think the more it becomes accessible to the retail participants, which can be in the form of tokenized deposits, because everyone has deposits, right? It just should be tokenized. So expanding the scale, I think these assets like deposits and other assets. In fact, I've seen certain difference in the UAE market as well. They have a lot of real estate tokenization going on. In India, it's more regarding the CBDC and it's more regarding the deposit tokenized at Reserve Bank, since it's the bank, so it will be more into the repo market, tokenize the repo market into wholesale. So those are the steps. I think that will actually help it achieve $10 trillion if we are able to, all the countries are able to tokenize the deposits. I think the space will increase by 100-folds. And yes, similarly in the UAE, etc., I've seen they started with real estate tokenization. A lot of startups that I've been watching out, they are starting, but other assets as well. So I believe that there are certain illiquid assets. If we tap them, for example, private credit, right? It's very illiquid. If we tokenize that, I think it will open avenues for $1 trillion tokenization market, because trillions of dollars are trapped inside private credit. So we can tap that to achieve that growth. And there are various different kind of asset classes, of course, bonds, shares, and there are also some discussions of investors going on in tokenized ETFs. So it's still in the process. The risks are, I think, being considered. I've read some articles of economists as well. So yeah, a lot of different asset classes are being tokenized in different parts of the world.
Yeah, I'm also a big believer in tokenized deposits. I think for banks it may be the easier move, because the deposits are already there and within their internal system, and versus to stable coins when it's like a third party non-bank issuer. So yeah, I think that might be a huge wave. Maybe some even better than stable coins, bigger than stable coins in the near future, but we'll see on that, maybe not. And talking about the predictions, exactly, what's your take, let's say, in 5 years from now? What are the maybe factors that help tokenization to gain adoption beyond limited pilots? Because we see currently financial institutions, including central banks and others, they are very careful with very limited pilots, sometimes with no secondary markets, just issuances. So what's your take on the factors helping tokenization?
Yes, I think everyone is trying their bit in different nooks and corners of the world. Like RBI is trying its best. The European Union has its own regulations, but I think there should be a standard. For example, the Basel norms are there for each central banks. I think some international institution like BIS can step in. They can create a guardrail standards which other central banks can follow. I think standardization is very important. If there will be this disintegration of the rules and regulations, I think it will get difficult for the firms to release those funds, tokenized funds, because then they'll have different regulations that will actually increase the charges of those funds. I feel that a standard regulation should be there, and it should be done by some international organization like BIS. Secondly, I believe that, of course, there are certain assets which are already getting tokenized, but we should also be focusing on the illiquid assets. As I said, the private equity can be tokenized. I recently read about a startup which was doing that, and private credit, etc. So it's very interesting because these markets were closed to the retail investors. We in India, I never heard anyone could invest into some startup, but yes, people are doing that. They're tokenizing the market, so retail investors can participate in those low ticket size investments. So that will be interesting to see. I think innovation in the kind of assets. So currently, tokenization is a kind of, people are adopting it more than the crypto, if we talk about it, because they're already working on the existing assets that had the trust of the investors. So since we already know about the stock investing, the bonds, etc., they're tokenizing that. So we have a trust on tokenization. So I think within the process, once we gain that trust, we can introduce new kind of asset classes in tokenization. But first focus should be on tokenizing the existing asset classes. Third principle is a bit unique, which is about invisibility. So I believe invisibility, how can tokenization achieve invisibility, you might say, and what am I talking about? So basically, when something becomes so embedded in our daily life that we don't know, like that we don't even mention it. For example, everyone is using AI, we're using Claude, we are using Gemini, but we might not know the integrities of the LLMs, right? And slowly and steadily, everyone, this AI word that is going on, people will also forget that will become so common in our lives. Similarly, tokenization should become so normal in the future. That is when I consider a technology to be successful, when it becomes so integrated in our lives that we don't even mention it. For example, we don't say internet-enabled banks, we just say banks, but they're enabled or running on internet and digital systems, right? So I think invisibility in the long run is very important for any technology if it really wants to be a part of our lives.
I think that's exactly right, and especially for blockchain native applications. I've heard the people from Aave, decentralized lending protocol, they've been talking about the Turing test, but for fintechs, when you open the Aave or like any other decentralized application and you cannot tell it's decentralized, or you cannot tell blockchain is involved. I think tokenization has to be the same, like a backend technology, rather than you see that you're interacting with crypto native application. For some people, it may be even scary at some point. I fully agree with that. And the interesting point you made about the liquid assets with the real estate, I would say, I've seen maybe some of consulting company, they made tokenization iceberg. When you have something on top which is tokenized, cash evidently is the easiest asset to tokenize, and then when you go down to the rabbit hole, there is real estate, credit, and other more exotic, sometimes carbon credits, environmental assets, and many other things. But we'll see which of them will gain adoption. In EU, there are some protocols doing that, and in Dubai and many others. We'll see how it goes. Yeah. So I appreciate your insights very much. It was an interesting conversation, and we'll be following up on the tokenization projects and the process in different episodes.